Okay, let's begin. Good evening, ladies and gentlemen, and a very warm welcome to you all to the part 2 of this Telescope event called Unraveling the Future series. My name is Anuj Sonpal, CEO of Valorem Advisors, and we are the external investor relation managers for Sterlite Technologies Limited. Unfortunately, Pankaj Dhawan is unwell today, and I would be subbing in his place to host this event. So let's begin without any delay. Through this 3-part series, we aim to clearly explain STL's growth strategy and also create an engaging conversation with our leadership team, who is leading Sterlite Technologies on the growth path. After the first discussion in September on access solutions, today is the second discussion focused on the optical business. But before we begin, I would like to add that that some elements of today's presentation may be forward-looking in nature and must be viewed in relation to the risk pertaining to the business. The safe harbor clause indicated in the presentation also applies to this webcast. Let me now introduce you to the management participating with us today. I'm very excited to say that today we have with us Mr. Paul Atkinson, CEO of the optical connectivity business of STL. Paul is an industry expert with more than 30 years of experience across multiple industries. Prior to STL, he was the managing director and group CEO of IXOM. He has deep expertise in the optical space and was associated with the Prysmian Group for over 20 years as the CEO of affiliates and regions across the world. During this stint, he has led multiple successful business integrations and was pivotal in delivering non-linear growth across business lines and geographies. Paul holds a degree from Melbourne Business School and Monash University. We also have with us Mr. Mihir Modi, CFO at STL. Mihir is a seasoned professional with more than 20 years of experience in finance, M&A, strategy, and general management. As CFO of STL, Mihir is actively working towards delivering consistent shareholder value through strong financial performance. Prior to joining STL, Mihir co-founded a contemporary digital media content company based in Mumbai. He has also worked as Chief Strategy Officer and CFO at Z Entertainment, and also held key leadership positions at Godrej Consumer Products, Novartis Pharma, and Ernst & Young. Just to recap, at Telescope 2021, we said that a decade-long network creation cycle has started driven by 5G, FTTX, and rural connectivity. We also said that we are well positioned to leverage this cycle with an increased TAM of $40 billion. And we have a very focused strategy for growth with 3 growth levers. Our 3 growth levers are grow optical business, globalize system integration business and scale in India, build access solutions business. So now today we shall discuss how we are going to grow the optical business. Without any further delay, I now hand over to Paul to take you through this presentation. Over to you, Paul.
Thank you, Anuj, and a very good afternoon, everyone. It is an absolute pleasure to be here this afternoon. I am very proud to be here on behalf of STL to discuss and show how the optical business is positioned to capitalize on the growth the market will experience for at least the next 5 years. After close to 2 years of a pandemic-restricted world, the need for a gigabit ubiquitous connectivity cannot be said to be overemphasized anymore. 4G in India and in most parts of the world has been able to pull us through the sudden surge in connectivity demand, whether to run enterprise-grade connectivity from homes, for online education, work, shopping, entertainment, or for parity in connectivity levels between commercial centres and suburbs. Despite these, 5G has become a crying need for more resilient networks, high speed and low latency across industries, negligible downtime, resulting in an overall well customer experience. Much will and has to change for the customer with the advent of 5G. STL will be at the forefront of this change, leading the technological core. So today I'm going to touch on 3 key areas. First, growing the optical demand. Second, optical networking growth strategy. And thirdly, highlighting how STL is delivering on the end-to-end solutions. STL is therefore, which I hope I can demonstrate, is strategically poised to harness not only the cutting-edge technology, but also our deep domain expertise and experience to cater to the countries and the world's demand for next-generation connected experiences. With strong global presence with next-gen optical preform, fibre, cable, interconnect subsystem manufacturing facilities in India, Italy, China and Brazil, along with 2 software development centres across India and 1 data centre design facility in the UK, we at STL foresee an accelerated level of involvement on the global arena across all major markets. Thanks, Isha. And to the next one, if that's okay. Thank you. The global optical fibre demand, cable demand is growing. There are large government investments in infrastructure, and in particularly in the US and Europe. Communication service providers are aggressively investing in fibre for their networks. And as you can see here on the left-hand side of the slide, AT&T have put this in the company's highest priority. Verizon are stating that all 5G nodes need fibre. Deutsche Telekom investing in fibre and FTTH networks, and Telefonica have signed an alliance JV which starts the FTTH rollout in the rural area. This is driving the growth for optical fibre cable demand globally, where we have witnessed a dip in 2020 of around 470 million FKM this year. This year is estimated to finish around 490 million FKM. And by the end of 2025, we expect a 1.2 time increase to 610 million FKM. Additionally, we have seen in recent times in China, one of the 3 telecom operators, China Mobile, have announced the highest volume in the company's history of 143 million FKM. We have also witnessed the cable prices significantly increasing by 58% in this tender. And my personal view is that in the coming 12 months, there will be a global shortage on fibre and significantly more value being put back into the market. Having said all of this, but what we also will be is remaining very vigilant on mitigating and reducing costs across the business, driving efficiencies across the operations, and continuing to innovate with a focus on the TCO, or the total cost of ownership, for our customers' business, and a relentless focus on cash conversion and strong net working capital management. This will position the company to capitalise on the growing optical connectivity of the business. Thank you. As the fibre networks are becoming denser, there is less room in the telecom ducts, i.e. the fibre management within the duct is becoming more important, and the demand for bend insensitive fibre and high density cables is increasing. The fundamental needs for fibre in data centres and 5G networks are sharp bending and flexibility. Bend insensitivity fibre penetration is increasing, and in 2021, it represents 32% of the market, moving to 37% by 2025. And STL has driven this technology in this space with the launch of Stellar, which is a fully bend insensitive fibre. There is also an increasing need for high-density fibre cables. High bandwidth data transfer applications, particularly in data centres and in the outside plant applications, are driving the demand for high-density cables such as IBR, which is intermittent bonded ribbon cable. The continued drive on reducing TCO, lower installation time, is also driving the usage of high-density fibre cable. STL's IBR cable, Celesta, is the solution, and the focus here has been on reducing the cable size and increasing the fibre count. And just as an example, we had one customer in APAC where a 432 fibre loose tube, which is standard fibre, we converted to IBR. And for the same diameter, we got double the fiber capacity into the same diameter of the cable. So IBR reduces splicing and testing up to 90%, up to 35% improved duct installation, and it optimizes the supply chain in many ways through cable rationalization and also reduction in the overall optical connectivity, particularly in the enclosures. Thank you. So as the fiber networks start to get closer to the customer, the optical interconnect is also gaining importance. The optical interconnect is a customized and engineered solution for fiber management and termination. STL has a full range of optical interconnect products in its portfolio. Through the acquisition of Optitec in Italy, our team of engineers are focusing on areas such as optical distribution frames. These are the distribution cabinets or panels for enterprise connections. The outside plant fiber interconnect, mainly focusing here on closures such as drop or long haul or aerial applications, terminals, drop cable connectivity, and here STL has just launched its new product called OptiBolt, which is a plug and play connectivity solution. And then distribution boxes, which are mainly for indoor distribution boxes or building terminals or MDU connectivity solutions. This area may seem a little complex, and as such, I'd like you just to show you a very quick 2-minute video that demonstrates the areas and the products of the optical interconnect range and application. Thank you, Isha. Thanks, Isha. Look, I hope that has explained very much the whole connectivity connection from the house all the way through to commercial buildings and data centers. And I just have to say, when you look at those boxes, distribution cabinets and the like, there is a lot of R&D that goes working with customers, particularly around size, design, and capability. And those enclosures where you saw the splice racks, that is, and the enclosures that basically sit underground, making sure they fit into the manhole size, etc., is incredibly important. So now let's just get to the optical interconnect market, and here it's growing growing quite rapidly, actually, especially in the US and Europe. The optical interconnect market is basically segmented into 4 key markets: the FTTX, or fiber to the X, node, home, premise, etc. Fixed broadband, which is non-FTTX, data centers, and the smallest part of the market being 5G. In 2021, the size of the global market was $7.5 billion US, and we see this growing by 30% to $9.8 billion US by 2025. We also see FTTX will still be the largest segment, around 56% by 2025. Growth is definitely being driven by the data centers, and we see this becoming even a greater proportion of the total market by 2025, of around 30%, or 2.94 billion of the total interconnect market of the 9.8 by 2025. And just quickly from the regional side, currently Europe and the US represent 70% of the market in 2021, and we see this being maintained as the industry grows. APEC, which also includes Australia, remains an important market, growing to around US $2 billion by 2025. Thanks, Isha. We just go straight to the key pillar. So here now, and the second part of what I wanted to communicate with everyone is really now focused on the optical networking growth strategy. And we have 2 very clear pillars. The first is to grow and establish the US and Europe as a second home market. Here we've started the journey to establish a very strong presence in the US, and we have a very strong presence in Europe. And we are expanding our capabilities to gain leadership in these regions. Secondly, we must scale the optical interconnect business. We intend to set up a state-of-the-art laboratory, and this will probably be in the UK, to design optical interconnect products with our key accounts and in partnership with those key accounts. And there will be a strong focus on developing customized optical passive solutions, cable and interconnect combinations. And today, let me say, we are an Indian technology company with a very strong international presence. But my focus is to create STL with my colleagues as a truly global company, recognized within the top 3 networking brands globally. This is what gets me out of bed every day. Thank you. So today, STL has a very good presence in the growing US market, with a team capitalizing on the opportunities as they come up. The US market looks set to grow significantly. There's a couple of points that are really worth pointing out here. The US government is investing in network infrastructure. There is already a committed investment of $20 billion in rural connectivity from the Regional Digital Opportunity Fund, or RDOF. And the Biden government have already approved an investment of $65 billion for broadband infrastructure across all of the states of the US. The optical fiber cable demand is forecasted to grow at 36% in the next 4 years, with volumes moving from 70 million fiber kilometers in 2021 to 95 million fiber kilometers by 2025. STL has very good traction in the US market. Our revenue has grown to 12% in the first half of this year from 4% last year. We have begun the process of strengthening our presence in the US with the erection of a state-of-the-art manufacturing facility. Made in the US is very important, particularly with the telecom operators in the US. We are establishing our operations in Kershaw County, South Carolina. As you can see, the factory is established and we have already started the fit out internally of the factory. We are investing in optical fiber cable capacity, and this is to augment the growth of the US. And it is envisaged the plant to be industrialized and commissioned by the Q1 FY23. The second major pillar of growth is the scaling of our optical interconnect products. This unit of our business requires a high level of new product development around customization. Our application engineers work closely with our customers to define product requirements. The telcos, the data centers, enterprise, hyperscalers being customers like Microsoft, Amazon, Google, etc. And it's all around passive differentiated optical solutions. And the three drivers here is first and most importantly is the design. So with the establishment of this state-of-the-art lab, a large focus is also increasing the patent portfolio of these product ranges as we design specific solutions for specific customers. The manufacturing here is very different to cable. Here you need agile operations, you need lower turnaround time, and certain markets like data centers require shorter lead times. Increased investments in tooling and logistics also becomes critical here. From the sales perspective, this is all around increasing penetration in our key accounts. And key accounts in all areas, as I said before, the telcos, the data centers, the enterprises, and the hyperscalers. And it's leveraging this thought leadership into the data center segment, specifically with hardened connectivity solutions. And this leads to customized optical interconnect for multiple applications. Thanks, Isha. So I know you may or may not have seen this chart before, but our key objective is to increase the optical interconnect attach rate. And what do I mean by that? So take it from an STL perspective. The STL attach rate equals STL OI, or optical interconnect revenue, as a factor or a percentage, as a factor of the STL optical fiber cable revenue. So, for example, in Q2 full year 21, the attach rate for OI was 1%. So for every $1 of optical interconnect, we were making $100 of optical fiber cable. By Q2 full year 22, we had moved this to 8%. And through this was driven predominantly through the strategic investments made, such as the acquisition of Optotec, which started this growth journey. So STL still has a large runway to increase the attach rate from 8% to 100%. So now let's just look and touch on the end-to-end optical solution. We have now moved, and our third message here is specifically around selling the whole optical solution. This example here really shows STL capabilities. So, a leading telco, telecommunications operator, wanted STL to deploy high-speed connectivity to 25 million homes in the UK. They needed a high-quality optical solution for the deployment that would also deliver significant savings in CapEx and in OpEx. The end-to-end networking solution helps us understand the network architecture at a deeper level and offers customized solutions. So here we focused on smaller cable diameter and higher fiber count, as I said before, the IBR, or intermittent bonded ribbon. Connectivity and enclosures designed for a simplified, optically efficient, cost-optimized network. And then we had the plug-and-play OptiBolt. So this end-to-end solution basically gave three very focused outcomes for this customer. The first was reduced cost. We reduced splicing and testing. There was no need for cut length of cable, and we also improved the utilization of the ducts. The second was it was a faster rollout. So reduction in splicing, reduction in cable preparation, and first time right installation. And finally, optimized supply chain. As I said before, we help with reduction of SKUs, reduction of closures, and reduction of the closure components. So STL's optical network solution will fulfill 30% connectivity needs for the top telcos in the UK. The most preferred partner for the top 3 telcos in the UK today is STL. The upcoming potential areas for us is across the entire Europe, including Italy. Thanks, Isha. So, look, I would like to just leave everyone with some very key messages here. The first and the first very 4 key points is around the optical market is growing, both cable and interconnect, and STL is very well placed to capitalize on this in the key markets. We are very focused on establishing the US and Europe as second home markets. Our customized applications providing end-to-end connectivity from the central office, outside and inside plant, optical components will continue to improve our optical interconnect attach rate. And fourth, we are increasing our customer adoption towards end-to-end optical solutions. So combine this with our 3 capabilities, STL's agility and flexibility in customized products and faster time to market, providing customized optical passive solutions, end-to-end solutions, leadership and presence in high-value markets, and our manufacturing geographical footprint expansion. Our core objective is to become a truly global organization and be a globally recognized brand. Look, I'll leave it at that. I really do thank you all for listening and dialing in today, and I'll hand it back to Anuj.
Thank you, Paul. That was very insightful indeed. We can now begin the question and answer session. Ladies and gentlemen, please note that if you would like to ask a question, you can click on the raise hand button at the bottom of your screen, or if you prefer, you can also send the question in the chat box, and I will ask the question on your behalf to the management. So we'll just wait for a few seconds till the question queue begins. The first question we'll take from Nirav Dalal. Nirav, if you could unmute yourself and ask your question. Nirav.
Yeah, okay, ma'am. Thank you for the opportunity and thank you for the elaborate presentation. My question is on the interconnect side of the business. As we said that it is more a customized, business per se. So how do you see this trajectory, that the attach rate to move? Would it be a steady move, or do you see that, a steeper move? Hello?
Sorry, Anuj, do you want me to answer that question?
Yes, please, Paul. Please go ahead. Sorry, I didn't know if the question was complete. Is that your question, Nirav?
Yeah. Okay. So if I were to just clarify, what I was trying to say is that the interconnect business is more a customized. You have to customize as per the client's requirement. So then, would this 8% attach rate, which is currently at 8%, would it be a steady move up quarter over quarter, or do you see this, show a steep move, say, up after 23 or 24?
Sure. Paul, if you could.
Absolutely. Look, thank you very much for the question. I think from our side, we plan to grow our optical interconnect business through offering, obviously, as I said, integrated solutions, fiber, cable, and connectivity, and increasing that capacity. So it's very much working with the accounts. In terms of the speed of that, I would say that the speed is very much going to be dictated around each of the customers that we are working with. It's hard to predict whether it's going to be steady or a trajectory, to be perfectly frank, because in some regard, you only need one account to take 2 or 3 of the solutions, and you will see a big jump, if that makes sense. So at this point, our focus is very much in the UK, Europe, in terms of driving that attach rate, particularly in the next 12 months.
Got that. And my second question is in terms of our of our US market, where we would be setting up our capacity there. So how do you see the capacity utilization of that plant happen? And in the beginning, would it be cannibalization in a sense that earlier we were supplying it there from say India or Europe, and now we would be manufacturing it from there and selling it. So would it be incremental demand, incremental sales, or how should one look at that?
Paul, please.
Yeah. No, thank you. Another very good question. Look, let me answer this very directly. As of today, we're currently building, in terms of the capacity that we're putting into the US, which is a serious plant for the US. I would say that based on the current sales and the average, the average sales of where we are today, that plant will be completely full from day one. So I think from there, the way that we're looking at it, particularly for the first 12 months, is that all of the business will be incremental. So at the moment, the position and the work that the US team have done is been very strong in developing and getting STL a very good footprint. But there's still another step for STL to do in the US, and that is with the direct telecom operators. So as I said in my talk, you have to be made in the US to be able to then deal with the major telecom operators in the US, and this we feel we can. And the plant's been designed to allow the plant to be expanded over time.
Got that. And just the last question. We have also announced about a UK facility also coming out, with capacity in the UK. Anything on that?
Yes, we're still moving towards that. Everything's in place. We'll end up launching the UK plant at exactly the same time as the US.
Okay.
And as I said to you before, the optical interconnect lab will be in that UK facility.
Okay.
And we're very excited by both, to tell you the truth, because this gives STL the real hallmarks of starting to now become a global organization and allows us to manage our capacity across many different markets now.
Got that. Thank you for the opportunity. Thank you.
Thanks, Nirav. Let me take the next question from Pranav. Pranav, if you could unmute yourself.
Yeah, hi. Thanks for the opportunity. My first question is regarding optical interconnect. So what exactly is the hindrance for the optical interconnect pickup? I mean, is it the capacity which is required for optical interconnect, or is it the the connect with the telcos to sell these products? Or so what exactly are the challenges for this attach rate to go from 8% to 100%? That's my first question. And secondly, can you comment on the wholesale pricing for the fiber optic cables currently? What is the trajectory? Because you did mention about the China mobile pricing being 58% higher. But what we have seen is that the China prices tend to be slightly different from the global prices. And so to that extent, if you can throw some light on how the OF prices have moved, that will be useful. Thank you.
Not a problem. Yeah, very good question. So I think we've now had Optotec I think for some time, and we've been developing a number of products, as I said to you, in this connectivity space. for the last 8 months, and we now have major accounts that are going to start to take on some new product. Yeah. So what you'll start to see is a large part of that product now that has been developed in the last 6 to 8 months coming to fruition in the next quarter and the next quarter. So I think in that sense, you'll see good growth coming from those new products, particularly in Europe. Having said that, this is a business that requires engineer-to-engineer technology and engineer-to-engineer working. Once the designs are come, it's very quick to get to market, yeah, because a large part of it's not like cable manufacturing where you have large machinery and the like. This is really around tooling and even in some cases 3D manufacturing to allow these products to be made. The second question in relation to what you were saying in pricing, look, I think I've now been in this industry at a very senior level, obviously with a different competitor for 23 years, and this market goes in cycles, yeah, and normally goes in 5-year cycles. One of the things that I'm seeing very much is that the spot prices in fibre are continuing to increase. So, and that's globally. So we're now starting to see those prices growing. Now, the fibre then goes into the cable, and there's obviously a lot of raw material and costs that go into that cable, on top of what is impacted from the pandemic in relation to supply chain and containers. So what you'll also now start to see is the average prices starting to increase, because all of these costs have got to be recovered. And I can tell you in the US and in Europe, we are now seeing all of the market going out with price increases to recover those raw material and logistics costs that are coming. So this business is very simple. Drive cost and drive efficiency, and where costs are out of the control and driven by market global commodity need to be passed on to the customer.
Thank you. If I can just, get one follow-up. On the interconnect business, you talked about, engineer to engineer engagement and, once you get the module ready. So is it safe to assume that, this optical interconnect business to be significantly ROC accretive as this business scales? Because you don't really have any capacity requirement, and EBITDA margin, I guess, are broadly in the similar range of what you get on the OFC. So consequently, one should see, disproportionate increase in ROCs for the optical fiber business. Is it a safe assumption?
Are you happy for me to answer that, Anuj? Or
yes, please.
Mahir? Yeah, look, you're absolutely right. These are, because this is specifically, in most cases, specifically designed for a particular account, but there are products that are engineered across multiple markets. And a large part of this market too is also about patents. So protecting your intellectual knowledge as you design it. What comes with that, as you quite rightly say, is a lot stronger margins than what you would see traditionally in cable. So you're absolutely right in terms of the ROCE. This is a far more better return than what you would see traditionally in your cable sector, which is why it's a significant pillar for STL's growth.
Yeah, thank you. That is from my side. This is really helpful.
Thank you, Pranav. Just as a reminder to participants, if you have a question, please use the raise hand button, or you can alternatively also type your question in the chat mode. We are taking questions as they come, but it may be also easier if you would like to ask the question on chat. Let me now request Mukul Garg. Mukul, if you could unmute yourself and ask the next question.
Yeah, hi. Am I audible?
Yes, you are. Go ahead.
Okay, perfect. Hi, Paul. Again, I think continuing on this optical interconnect part of the equation, generally, who is the largest player if you look at the European and US market in the optical interconnect space? Is it Corning or Prysmian, or is there someone else who is a who has a larger presence in front of telcos there?
Oh, look, another very good question. Look, I think, first of all, let me make one point. Europe and US have very different connectivity solutions, yeah? So what works in Europe doesn't necessarily work in the US. Point number one. Point number two, in terms of overall connectivity, the two major global players is Corning and CommScope. I would say, and I envisage that STL will be around the same size as Prysmian within the next 12 months. Thereabouts. So in the connectivity space, yeah. So I think this is an area that is strategically, as I said to you, very important for STL. And I think the move to buy Optotec was a very, very clever move to position the company to be able to start this development within the overall interconnect space or connectivity space, yeah.
Right. So, I'm guessing from your answer is that in Europe, it is still not a, OFC vendor-led model, given that Prysmian is not a large player there. Generally, what's the difference, which is there in the European market, and what is the confidence you have that you will be able to increase that 8% number to, somewhere around 30, 40, 50% over the next 12 months, given that it's a separate vendor who is kind of coming into the play. And just, a kind of associated question, is the vendor directly involving with the telcos, or is it more of a pass-through business, which happens in Europe?
Okay, so I think there was 3 questions there, and I'll probably forget one. So please don't hesitate to come in. I think the first aspect is that, look, US and as I said to you, US and Europe is very different when it comes to connectivity. I think in Europe, this is very much a large part of the networks in Europe have been, I'm going to call bespoke, if that makes sense, or OEM. So what that means is they're building the connectivity depending on the particular telco in this case. Whereas the US, particularly the major, AT&T and Verizon, have gone for a plug-and-play approach in the telco connectivity space. I would suggest to you here that we are very advanced in the UK in relation to product development and where we're trying to head our product. A large part of of our growth in the next 12 months will come out of Europe and to a lesser degree Asia Pacific. I believe that we're probably 12 months away, particularly in the US, not North America, because Canada has a little bit different opportunity as well. But in the US, I think we're probably 12 months away in relation to where we need to be, both in the data center and overall connectivity space. Now, that was the first question. What's the question I've forgotten? Sorry, Mark.
The other question was on the model of optical interconnect deployment. I would assume that it won't be a scenario where telcos are directly procuring, even if it is a bespoke model, and it will be kind of routed through the vendor who is supplying fiber cables. Was that the case?
Not necessarily. Not necessarily. So the connectivity component is very much engineered to engineered solution. Yeah. Now, where it does become very important, and we're finding this within STL, which is why there's such a big focus on selling the solution, is the fiber and the connectivity and the other areas of the whole technology space is what actually becomes also very important. But the relationship is basically customer to manufacturer, if that makes sense. So I'll give you an example. In the UK, the leader in this is BT, and BT have been very much around 2 parts. One, engineering a bespoke type of approach, but they've also in recent times now moving very quick to having a fast rollout. Yeah. Because they've got large targets of what they need to hit. So in that part, I suppose it comes also back to the engineers. And one of the strengths that STL has is they have the engineers that also not only understand the connectivity, but also the fiber and cable technology that goes with that. And IBR is a really good example. Yeah, so it's hard to explain the bonded ribbon, but to be able to splice that fiber and connect it into one of those splicing trays without having to have a tool and the like to be able to do it saves an incredible amount of installation time.
Mm-hmm.
So everything our engineers are doing is all about what the service, civil service companies that are deploying it. Yeah. And I think one of the other strengths that we have as a company is our service vertical, which also gives us that first-hand experience of what's the frustration when those, let's say, augmentation engineers are out there connecting the whole connectivity solution.
Thanks. Paul, if I may just squeeze in one final question. I'm just trying to quantify the 8% number or the 100% number. What is the like-to-like dollar spend on optical interconnect per dollar or per FKM of cable?
Okay, I might need one of my colleagues to answer this, but basically the market size for outside, excluding China, I think is only very slightly less than the whole of the cable market worldwide.
Okay, so fair to assume 1-to-1.
Close, yes.
Thank you so much.
Thank you, Mukul. Participants, as a reminder, once again, if you have any questions, please feel free to use the chat box. You can ask your questions there, and we'd be happy to ask the management on your behalf. Let me ask Anurag Jain, if you could unmute yourself and ask the next question.
Yeah, sure. Thank you so much. Am I audible?
Yeah.
Yeah, just one question that I have. So we are setting up a lot of manufacturing facilities, outside of India, in US, in UK, labs in UK. So my question was in terms of profitability, in terms of capital efficiency, how do these setups, stack up versus India, and would we still be, able to meet our, ROS and capital employed, those targets that we've given, the 3-year margin targets and growth targets?
Should I take that one?
So yes, please.
Yeah.
Yes.
So I think so you're right. I think there is the construct of how the P&L looks when you're manufacturing in the US is very different. Not very different, but it's different from how it looks when you manufacture in India or in any other location. Having said that, to answer your question, given that you have on one hand clearly cost benefit of manufacturing in India, you have a cost saving of not having to spend on freight when you dispatch from India to these markets. Then there are the realizations which are better and the incremental volumes coming from there. The make in America being the additional cream that you can get out of that market. All of it kind of adds up to a final answer, as you asked. The ROCE will be in line with what we have set ourselves, which is north of 20%.
Yeah, perfect. Thank you. That's all from my side. Thank you so much.
Sure.
That helps.
Thank you. Participants, once again, if you have any questions, please use the raise hand button or ask the question on your chat. Let me ask Vipul Kumar Shah, if you could unmute yourself and ask the next question.
Yeah, so my question is regarding this attach rate from 8% to 100%.
Sorry, Vipul, we couldn't hear you. Could you repeat that?
Yeah, my question is regarding this attach rate for interconnect products from 8% to 100%, which is shown in the slide. So that will happen over what length of time?
Paul, do you want to try that?
Absolutely. Look, at the moment, we're not committing to 100% or 50%. Yeah. What we can see at the moment is we're trying to get the organisation to understand that there are two markets here. One, basically 1-to-1, 1.1, the size of the two markets. We have a very strong position already in fibre, a very strong position in cable, and we now need to leverage the whole technology, including the connectivity, as a one-to-end-to-end solution. What I can say, Vipul Kumar, is that I think over time you'll start to see over the next quarters the attach rate growing. Bearing in mind, I still have the driver to drive the cable part of our business as well. So if you say the cable business stays stagnant and we're growing connectivity, okay, maybe in the next 18 months we get to 50%. But I can tell you, I won't be happy or accepting the performance that we're not growing our core business at the same time as leveraging the connectivity. So look, I think in terms of the vision that I have, I would say to you, all in all, probably within the next 4 to 5 years, it may be 70% cable, 30% connectivity. But from where we are today, that will be a significant increase in the connectivity business. I hope that's answered the question in the right way, but it's not just a matter of going 1-to-1 and to get it there, because we've also got very strong strategies to drive the rest of our business. Yeah.
And lastly, what is the capacity? What will be the capacity of US plant?
Well, look, I'd prefer probably not to comment just to give our competitors too much information at this point. But what I can say to you is that it will be a serious plant.
And fiber will be sourced from India for that plant?
Correct. All of the technology and the fiber capacity will be based in our facilities in India. And there's a strategic reason for that too, Vipul, because it also allows us to drive efficiency, to drive best-in-class manufacturing, and to allow us to not only get the right yields coming out of the plant, but it will also allow us to expand the capacities of the plant in a very cost-efficient way.
Okay, thank you and all the best.
Thanks, Vipul.
Thank you. Just to make sure, Anurag, your hand is still up. Do you have a follow-up question, or is
sorry, I lowered my hand. Sorry.
Okay,
my questions are done. Yeah.
Thank you. Participants, just a final reminder, if you have any questions, please use the raise hand button or ask the question on your chat. We'll just wait for a few seconds to see if there are any more questions. Once again, participants, if you have a question, please use the raise hand button. Okay, I guess we're done with all the questions. Once again, Paul, thank you so much for a very interactive session. I would now like to hand over the meeting to Mihir Modi for his closing remarks. Over to you, Mihir, please.
Thank you everyone for joining us on this event, the Future Series, the second part of that. We are very pleased to take any more questions that you may have later on, and you can get in touch with us either directly to me or Pankaj or through Anuj, and we'll be happy to take more questions. Thank you once again for joining us for this session, and we're very glad to share with you more about our business as we go further ahead. Thank you very much.
Great. Thank you. Thank you everybody for joining us today, and thank you, Paul, and thank you, Pete.
Thank you, everyone.